U.S. yields are moving higher with the 10-year now up about 4.1 basis points. The 2-year is up 3.8 basis points. That has helped push the U.S. dollar higher, including the dollar versus Swiss. I'll talk about the technicals driving this currency pair as it reaches and stretches toward a key technical swing area. I'll talk about that in this video, so let's get started. Looking at the hourly chart, this area capped at the 0.8076 level has been home to a number of different swing highs. If I were to take that line off and watch this yellow area going back to this point right here, you see how we high. A ceiling is being formed right here. We broke above the ceiling here and then use that level as a floor floor right through here and here. Then we moved above and below through here and then use that level again as a ceiling through here before moving to the downside. We came back up to that area right through here, and here. Traded above and below it and trading over the last month or so of trading through here, but then reestablished resistance at that area right here before moving to this most recent low. And here we are moving back within this area between 0.8066 and 0.8076. Guess what? We need to get above this area to increase the bullish bias. If we're able to do that, then we can aspire toward these highs right through here near the 81 level for the dollar versus Swiss. Above that is this high price from the month of October, or early November, I should say, 0.812335. Those would be the next key targets on the top side. On the downside, close risk now would be this area right through here where we had a swing high from last week's trading here, and lo and behold, we based against this area and trading here today before moving to the upside. So 0.88052 is the low of that swing area. More conservative risk levels would be down here at the 100 and 200 hour moving averages near the 61.8% retracement of this move to the downside. This area is also a key support level. As you can see in last week's trading, we tried to move back below that level here but could not do it, and then reestablish support here before moving to the upside. So where does all this look in relation to the longer term chart? Well, if I have to go all to the weekly chart, because here we are down here, and as you can see, the 81.235 level, which I just outlined, is just right here. We're at the lowest levels, or still in the range of the lowest levels going back to 2011. That's a long time ago, folks. So there's room to roam to the upside. The high for the year was way up here near the 92-ish type level. We're down here at the below the 82 level, more in the below the 81 level, I should say, or near the 81 level. What is it? We're trading at 0.8073, so just below the 81 level. So there is room to roam to the upside. Just the 38.2% retracement of this move to the downside comes in at 0.8352, and that level also happens to correspond with this area right through here, which was home to different lows going back, a key floor that was broken here. Tried to move back above it here, but then failed and then reestablished resistance here. So that would be the key target on the top side. If this momentum can continue, we know the levels on the hourly chart that need to happen to get it going toward that level. But my point is there's room to the roam to the upside if the buyers can stay more in control. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.